Ladies and gentlemen, boys and girls, welcome to the show. I am your host with the most, Chase. And what a day, what a week, what a year it has been. And we're going to talk about it. We're going to talk about the markets today, the winners, the losers, and why we did what we did and why we're rallying in the after hours. We're going to look at some notable news items as it pertains to Intel, Scott Bessent, and then we're also going to talk about Bitcoin. And then, of course, we're going to finish things off by looking at Tesla and their earnings. Now, they just reported earnings. Things are moving after the bell, and we are going to talk about it. But before we dive in, if you could please go ahead and subscribe, that would really help me out. Now, guys, a quick recap of the market. Very green day across the board. 96% of S&P 500 constituents were green today, a broad-based rally. What I would even proclaim as a breadth thrust led by selling in some of the cyclical names, the sensitive names, stuff like tech, but just a really solid day. Gold actually fell today, and that was telling you everything you need to know. It clearly was a risk on fever today, and we saw this pretty much everywhere. You saw stuff like the mega caps rally, high beta rally, value rally, staples rally, even financials caught a bid today, all in excess of 1%, but a lot of the outsized moves coming from the tech space in particular. And we actually saw this was today. This was in regular hours trade. We had very solid momentum. And then we actually had even further momentum in the after hours. And that's because Donald Trump came out and said China tariffs will come down. They won't be as high as 145%, but they also won't be zero. This is exactly what the market was looking for, and this could propel us significantly higher as the days and weeks go on, especially as we get certainty and especially as we progress through earnings season. And he said, I won't play hardball with China. I'm not sure what's happening behind the curtains, but I do believe that in early May, he's going to take a trip to China to discuss everything. And that is very good news. And with what we heard with India at the start of today, what we're seeing with China, it looks like the plan is coming together. Now, what also helped sentiment today is Scott Bessent. Earlier on during the day, he said that he doesn't expect the standoff with China to continue. He expects it to de-escalate in a closed-door investor summit. And and the market really didn't rally on this. And because of all of the news we got today, markets continue their move in the after hours. And guys, this was always the case, and this is why I championed for you guys to always buy the dip, because stuff like this, the tariff situation was very easily resolved with a phone call, with a tweet. However, we are still feeling the effects of it. Intel came out and said they were going to cut more than 20% of their staff. Now, they just got a new CEO, so this could be them reorganizing. He did go on to mention there's a ton of bureaucracy in Intel. This could be because of tariffs. I think both things are to blame. However, Intel is cutting a large part of their workforce. 20% is a lot, and I think this is going to be good for the company longer term. And then, guys, we're looking at Bitcoin. Bitcoin has surged over 8% since April 1st, while the S&P 500 has actually dropped more than 3%. And you could see here the correlation between gold and the S&P 500 officially flipping as per April. And this is showing Bitcoin's independence from stock market trends despite the post-election rally alongside stocks. Bitcoin continues to climb, trading above 91,000, while the S&P 500 falls to the 5,300 area. The divergence suggests, guys, that Bitcoin is acting as a portfolio hedge, though the long-term trend remains uncertain. And we all know why it's doing this. It has to do with global money supply. If you follow me on my main channel, we look at Bitcoin in depth every single day, and the moves we're seeing in Bitcoin is no surprise. But let's talk about something that was a surprise today. Elon Musk. We're going to look at Tesla's earnings, and it was quite a dumpster fire. If you ask me, you could just see here that they missed on almost every single metric. Revenues for the year were down 9.2%, led by selling in automotive. That's essentially their cars, down nearly 20%. All of the other segments are doing really well, looking at like a double-digit growth in some cases, up 34%, 67% on a year-over-year basis. Gross margins did beat, but we saw a miss in every single other segment, from EBITDA, which was down 16% on the year. EPS was down 40%. Operating cash flow missed, CapEx missed, and free cash flow, while we did grow on a year-over-year basis, did miss expectations by a very, very significant margin. And you could also see here that production and deliveries came in at 362,000 and 336,000 for those, which is a decline of 12% and 13% on a year-over-year basis. So guys, these are not pretty earnings as well, but the stock was up 4% in the after hours, and that was because of the earnings call. I'm going to go through some of the highlights here as per Colin. So Elon, a never a dull moment, blames the attacks on Tesla on those benefiting from the Doge waste and fraud. That's crazy on an earnings call. He says the attacks are organized and paid for. Elon said, starting in May, its time in Doge will diminish. We'll continue to spend 1 to 2 days per week as long as President Trump would like. So this is why the stock was up significantly in the after hours, because, it's sort of saying, hey, starting in May, which is literally next week, Elon is going to refocus on Tesla, and that's what shareholders want. Elon said Tesla has been through many near-death experiences. This is not even close, although there are some challenges. Tesla's future relies on autonomous cars and robots. That is significantly different than the mission of sustainable energy. So sort of shifting the goalpost, but you kind of have to do that as a CEO as your company progresses. Elon says new initiatives won't move the needle financially until middle/end of next year. That's 2026. That's a pretty quick timeline. And by, I think, move the needle and new initiatives, he means robots, right? He means robots. He means maybe even energy storage and solutions. Very, very interesting. So he thinks next year they're going to move the needle, or what does that mean? We don't know. On tariffs, he said that tariffs are tough on the company. Margins will be low, but Tesla will likely be in better shape than most of its competitors. I kind of agree. Elon said team focuses on bringing robo-taxis to Austin in June. So it looks like robo-taxis are about to ramp up in 2025. Next year, we should see material financial changes. So I'm assuming he means robo-taxis and robots as well to be the material outlier in changing the financial landscape for 2026 and maybe beyond. Elon says once we make it work in a few cities, it'll be rolled out in any jurisdiction where it's legally allowed. So they're sort of going to have 1 or 2 cities to test it out, and they're just going to roll out the robotaxi. Interesting. Thousands of Optimus robots doing work in Tesla factories later this year. That's a very, very big benefit right there. That's a positive. Confident in getting 1 million Optimus units per year in 5 years, possibly 4. That's big. The reason why that's big is because he sold about 1 million Model Ys over the last couple of years. So 1 million in 5 years, that is significant. How much are they going to charge for these robots? 20,000? 30,000? That's a lot. That's a lot of robots. Elon says you can double the energy output of existing power plants by using batteries, megapacks, okay? Q1 is usually the worst part of the year. Weather slowdown, unit sales, all right. Q&A session begins. Shares up 4.2% in the after hours. Tariffs will have a bigger impact on mega caps, blah, blah, blah. Okay, so those are all of the questions. So yeah, guys, not great earnings. The earnings call was so-and-so. Typically, Elon does, talk about the future more than he talks about what's happening currently. But we need to ask ourselves, is Tesla a buy right now? So you can see a year is everything. We have the most up-to-date stats, $95 billion in revenue for the year. So this is actually a big company. They grew revenues 1% on a year-over-year basis, but that's a far cry from what we saw in 2023, 22, and 2021. So we've definitely seen growth slow in a material way. If we go down to the margins right here, 17% gross margin, which has slowed from about the 25% mark, 7% operating margins, and a 3% free cash flow margins. The company did $3.5 billion in free cash flow for the year. If we look at the company's balance sheet, they have $36 billion in cash. And then if we go down to total debt, $5 billion in total debt. So they're in a very, very healthy position. So the company is there's no solvency issues for the company in the near term. You could see that the forward PE is 91, so it's very, very expensive. It trades on a 7 PEG, probably the most expensive Magnificent 7 names. Its efficiency ratios are not that great, if you ask me, and they've actually been declining in recent years. And the earnings yield of 0.8 and a free cash flow yield of 0.47%. So yeah, not a good look. So, the business as a whole, while it doesn't have any destruction risk because it's financially sound and it's still making $95 billion a year, The company's financials have deteriorated from their peak in 2022, 2023, and the company is simply not growing at the moment. Now, when you look right here, you could see that for 2025, this year, analysts are expecting 11% growth and then 19% growth in 2026 and 20% growth in 2027. And so that would mean that the company still trades on 56 times earnings in 2027. The average analyst has a buy rating, and you could see the average price target being 287, so they see 20% upside. The lowest price target is $24. That is absolutely insane. And you could see a 7 strong buys, 9 buys, 13 hold, 4 sells, 3 strong sells for Tesla. Have we got any more recent updates? April 16th, is that where we are right now? No, today's the 23rd. We don't have the most recent updates. But is Tesla a buy right now? I would say no, guys. It's a little bit too expensive. The valuation doesn't justify the growth, and it's just not that attractive when you look at all of the other metrics. So is Tesla a buy? I don't think so. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button. I'll leave a comment for the algorithm. Cheers.